Hopefully. Right, 1 second. What's going on here? 1 second. What's going on with the audio here? Where are we? We're on track one, which is this one right here. Have we got the audio going through correctly? Let's have a look at this. H6 output. H6. Everybody hear me? No, we can't. There we go. All right. Okay. So, guys, let me know if you can hear me, and let me know if you can hear me clearly. Thank you for dialing in. I know that the euros are going on right now. So, as someone has actually already put into the comment box here, so I do appreciate you joining me at 5 p.m. today. I just thought, being a bit different, I just wanted to kind of have a little conversation with you guys and maybe do a little bit of a live. Just make sure I get this level right. There we go. I can hear myself in the headphones. Okay. So how's everyone's week actually been, guys? Yeah, in addition to, in opposed to having my Friday video, I was going to upload something really interesting this evening, but the reality is we just didn't have time to get it ready in time. So hence why we're just kind of doing something different here. But I think this will be an opportunity to take any questions that you guys might have. And yeah, just generally see how things have actually been through the week for everyone as well. I know I've had a lot of comments regards the Binance developments over the weekend that we reported on, did a live on Sunday. Was it Sunday evening? Sunday evening. That went down really, really well. And I know that there are still questions that people have been asking in the comment section. The reality is I can only tell you what I found out as the news was actually coming out. I don't know, or at least looking at it this week, I haven't seen that they've, I've seen their PR statement and I can't see that they've done what the FCA wanted them to do in regards to putting a note on the Binance.com website. I would imagine they feel as though, from a legal point of view, because the FCA was referencing Binance Markets Limited, or BML, which was the company. I suppose, from a legal point of view, their stance is that that doesn't necessarily, that ruling or those directives or rules that the FCA are trying to enforce don't apply to the main business, Binance.com. I know that a lot of people in the comment section have been alluding to that, but that still doesn't negate the fact that the FCA have said you need to do X. And at the moment, I did check this day before yesterday. I'm just going to check it again right now. I'm watching on the website. I can't see the language that they were asked to put on the Binance.com website on there. So I don't know what's going on with it at the moment. I think there'll be lots of questions, but I think ultimately the sentiment is that if you are just, buying to hold things, you're completely fine. It doesn't really change anything at all. I think their stance, when I looked at their PR message, was that actually it doesn't change anything at all. So I think they will continue to provide regulated or trading services to UK citizens on Binance.com. Again, I don't know the legalities of that, so I can't really comment. But looking at the Binance site right now, I can't see any of the warnings or language that the FCA said that they needed to put on. But who knows? I think if you do have questions on it, they did provide an email address, which I highlighted in that video, to approach and ask questions, and that's what I'd really recommend that most people basically do. So let's have a look and see. MC, good to see you here, by the way. Matt is saying here, let me just bring this up actually on screen. I got money box from your video and you did ages ago, and got to say thank you. 33% up last year and 8% on this current year. That's really, really good. Yeah, the money box portfolios, they're not actually, investment portfolios have done okay. I mean, I've got a money farm investment where I had a little bit of money in there. And I was actually surprised. I looked at it for the first time yesterday. I was actually really surprised at the performance that they've actually been able to deliver since then. It's really, really good, actually. Where's my phone? Because I looked at it yesterday, because I update investments every quarter. So I little look and see, however, my sheet. with everything. I was really, really impressed with the performance that they've actually had on there. I was like, okay, that's pretty cool. I'm just going to log in right now and see where we are. Because when I looked at it, yeah, it is up 7.57% right now. And I will put some of that down to the fact that they did rebalance the portfolio themselves. Maybe like 3 months ago. 2 months ago, I think it was in May, they rebalanced the portfolio when things were a bit volatile. And that's one of the benefits that you have with, active management. You've got a team of people there who will basically have a look at adjusting the portfolio and moving the portfolio around depending on what they see going on in the market. And Money Farm took the decision to look at the portfolio, move things around. And since then, it's done really, really, really well. So I'm really, really happy with that performance, actually, 7.57%. Since I put it in there. I know. Many people be like, oh, 7.5% is absolutely nothing. I think you have to remember that the performance in the stock markets, and when you're thinking about crypto returns, that doesn't apply to the stock market. So whilst Tesla has done ridiculously well, did do ridiculously well when it was on a bit of a streak, that is in no way representative of how the markets tend to perform under normal circumstances. We're not in normal circumstances right now. So I think that's really, really important to acknowledge. So, 7.57%, and that's just on one portfolio. I've not had a look at all of the performance across all of mine. I mean, things like my pension that are up quite handsomely. What else did I have a look at, actually? Let me have a look. Because I only did this, it was either yesterday, the day before yesterday I did this. I did this week just to update all of my my investments and keep it on track. Where did I put it? Here we go. There it is. Yeah, so the pension's up very, very nicely. Actually, the pension's up very, very nicely. The other smaller pot that I've got with Pension B is up very nicely as well. My hard goods Lansdowne is kind of like, because I've got quite a lot of Tesla in there. It's doing okay. Trading 212 is, again, individual stocks. I've got in my trading 212, I've got some cannabis stocks in there as well. I've got 3 cannabis companies altogether. 2 of them are, one of them's okay. 2 already done okay. The other 2, not so much. So trading 2 is okay. Money Farm is doing really, really well. And other stuff that I've got as well across other areas is also actually doing really, really well. So I think when you're investing like this, it's important to make sure that you're reviewing and just seeing where you are on a regular basis. I will tend to do it, every 3 months. I definitely do it every 6 months. If I pick it up every 3 months, I'll do that. But certainly, if you don't have the time, definitely think about doing it on a yearly basis at the very, very least, because you just want to make sure that you're on track. Because if you're going into this, and again, we talk about goals, right? If you're going into this, you're saying, right, okay, my target performance for the year is, 7% or 8% performance across all of your investments, then it will be important for you to understand, okay, where are you at any given time? And if you are behind, try to seek out the answer as to why you're behind. Is it because the markets are trading off and that's just the markets in general? Or is it because the stocks that you bought are just underperforming, or the provider or the platform that you're using is just underperforming? There will be an answer to that question. And once you have the answer, you'll then have to decide, okay, what do you actually want to do about it? And if you do anything at all, because sometimes you may not necessarily have to do anything or want to do anything about it. But unless you're asking those questions, it's very, very difficult for you to take a stance of where you both basically are. Lead, welcome. How are you? I need to catch up with you guys, actually. Let me just put that on there. Yes. Not spoken to for a while, actually, in the UK Money Bloggers, I think was the last time I spoke to you guys. So welcome. Thanks for dialing in. Let's have a look at this one. Have a look at AvePoint. Finally merged today. 30% year-on-year growth, debt-free and profitable, using $250 million of cash for acquisitions from the deal closing. Severely undervalued compared to SaaS peers. Okay, let's have a look. Let me have a look right now. I don't know that company, so I don't know whether they're historic, whether they will have any accounts. But generally speaking, I know that my approach to investing is very, very different, I guess, to most people, and I'm comfortable with my way of investing. I don't necessarily go looking for companies specifically um, to basically buy within the portfolio to maximize my growth. Like I said, my main approach is a core satellite approach. So I prefer to plow most of my money into index funds, and then with particular companies taking interest with some individual holdings, like Tesla, for example, or cannabis stocks, those kind of things, and use that as a way forward. Let's have a look at our point. Rallek's on here. Rallek, how are you, man? Listen, hold up. If you're still on, let me drop you a link actually, because it will be great to catch up with you if you're willing. Let me find this quickly. 1 second. Let me pin it right up to the top. And let me pin it right to the top. There you go, Rallek. If you want to join me, feel free to join me, because it'll be good to catch up and see how you're getting on, and maybe have a little chat about crypto, because it's been very, very interesting over the last I would say 2 weeks. So it'll be interesting to see whether you've seen any developments on your sides. And we can have a little conversation about that. So if you want to join me, mate, use that link to join, because it'll be good to catch up and have a little conversation. I'm just going to have a look at AvePoint. See, I can't find them on here. Chris, if you got their ticker, what is their ticker? I'll have a look at it, because I've just gone on to find them, and I cannot find them by name. So what's their ticker? Let me know their ticker, and I'll have a look at it and see. Stock. 1 second. Let me just see if I can find this on here. AVPT. AVPT. Is that them? Let's have a look. Is this them? I will share my screen in a minute once I know that this is the right company. Is this the right company? I'm not sure what it is. Is it AVPT, Chris? Let me know. AVPT, you're saying? Could be found on the old ticker APXT. Okay, I've got AVPT here. It's on the NASDAQ. Hang on, where is the profile? Invalid data. Invalid date. Data is not available. What? Okay, let me just try. I'm going to try another. Hang on, let me just try actually. So I don't want to go watch it. Let's look at it at Simply Wall Street, because it's not going to give me the view that I actually want. The ticker symbol changed today. APXT. Let's have a look at that then. APXT. That's APXT is Apex Technology Acquisitions. Is that right? Okay, Rallek's on here. Bear me 1 second, guys. Rallek, bear me 1 second. I'm just going to see if I can just find this very quickly. Is the SPAC? Okay, cool. Right, I'll have a look at this in a moment, mate. Let me just get Rallek in here and have a little conversation with Rallek. Let's get rid of that one as well. And have I done something wrong there? Hang on 1 second. Where are we? How are you, mate? You okay?
Yeah, I'm doing well. How about yourself?
I'm not bad at all. Let me just sort out the screen. What's going on here? Because I don't know if people can see you. I can't see the dual screen. Let me know, guys. Can you see both of us? Can you just see Rallek? That's very, very strange. 1 second. What's going on here? There we go. All right. That works. How are you, mate?
Oh, I'm doing well. I'm doing well. It's just really, really warm at the moment here. It's like,
is it
30 degrees Celsius every day.
Yeah. Well, you know what? I've got a friend who's coming back to Bulgaria, and yeah, she's like, it's absolutely roasting out there. She's supposed to be leaving today, actually, but she was like, "Am I going to fly or not?" Because the quarantine rules out there are a little bit. She's a little confused around what the quarantine rules are for her out there as a person going out. But she's like, yeah, it's really, really hot. Enjoy it though. We wish we had that kind of weather over here in the UK right now.
Yeah, UK problems, but I mean, what can you really do about it?
I know, man. How have you found the crypto markets over the last couple of weeks?
I mean, it's been relatively flat overall. Kind of just doing what I've thought it would do, which is
Mm-hmm.
just sideways trading. I don't think we're really going to see anything happen until Bitcoin breaks out of that 42 to 43k uh, ceiling
Mm-hmm.
where it's facing all the resistance at the moment. And vice versa with regards to its support. I don't think we're really going to see anything on the downside until it breaks the 30k. When it did break the 30k, it stayed there for probably less than like an hour or two before
Mm-hmm.
bouncing up quite significantly. But overall, we're just not really seeing that much volume at the moment. And I think a lot of the institutional money is also just waiting on the sidelines for a clear breakthrough to the upside before they start piling in. That's at least my opinion at the moment.
Yeah. How down the situation with them down miners out there? Do you think that's having a big impact or not really that much?
Sorry, you lagged out a bit at the first part of that question.
So I was just saying, do you think that the whole issue with China cracking down on their miners, do you think that's been a little bit of had a bit of an impact? I mean, they're saying that it's wiped off 400 billion or something like that in value of Bitcoin, but what's your take on that?
Yeah, I mean, in general, China's always in the crypto news every single year.
Mm-hmm.
It feels like over the past like 3 years, we've received the same bit of news that China doesn't like crypto, and it's like that's not really anything new, but for some
Uh-huh.
reason it keeps impacting the price as if it's just come out for the first time.
Mm-hmm.
But in terms of mining in general, I actually see it as quite a good thing. There was quite a lot of fear at one stage when there was the initial boom, which was that there's too much mining in China and that they've got control over the hash rate essentially.
Mm-hmm.
So I see it as more of a good thing overall that a lot of that hash rate is leaving China to North America and other parts of the world too.
Yeah. Do you think there will be a big uptake in sort of North America and just to compensate for that? Because I think ultimately, the question is, will Bitcoin and cryptocurrency still be around? I don't think there isn't a force in the world, regardless of how much the regulators will try to stop and stifle the growth of cryptocurrency. I think it will still be a thing. Do you think there'll be a lot of uptake? I'm sure there will be uptake for people saying, you know what, if they're not going to mine it, we'll mine it. Thank you very much. There's only ever going to be 21 million Bitcoin. So why not get in on the game right now?
Exactly, and I mean we're not going to see that last Bitcoin mined probably in our lifetime. So I don't think that's going to play too much of a role in the immediate decisions because we still have like another 100 to 200 years before that final Bitcoin is mined anyway. Obviously, unless computing power has some massive breakthrough,
Mm-hmm.
but it is set to scale. The difficulty is set to scale based on any type of breakthrough we do have in technology anyway. So just in terms of the uptake in North America, I definitely think we're going to see an increase in mining in North America. But I also wouldn't be surprised if we do start to see a upswing in mining across the globe as well. It's sort of more of an opportunity for those other nations who maybe didn't have the infrastructure set up initially to now catch up a little bit and also participate.
Yeah, absolutely. And what about Ethereum? How have you found Ethereum over the last week or 2 weeks or so?
Well, I think right now all eyes on Bitcoin. As much as I love Ethereum, I'm more of an Ethereum fanboy than I am Bitcoin. But just in general, I think until Ethereum has its 2.0 upgrade, we're not going to see much out of it until Bitcoin sort of picks a direction to move. If that's an upward direction, then maybe we'll start to see more of that decoupling that we did see previously, where Ethereum was gaining a lot more strength compared to Bitcoin. But obviously, as the correction did take place, that relationship sort of cemented itself a little bit more, with Ethereum losing a lot more value to Bitcoin and sort of losing that ground that it had initially made up. So overall, I wouldn't be surprised if in the long run we do see Ethereum strengthen to Bitcoin. But at least now, for me, all eyes are on Bitcoin. I'm just sort of waiting, using this as an opportunity to just increase my exposure even more, which is already ridiculously high. But I mean, I'll continue to do so, at least with my own personal my own personal investments
Yeah.
off of eToro as well.
So have you basically
And
been buying the dip then, essentially?
I've been buying the dip since like 45K.
Nice. Nice. That
So
shows some
yeah,
confidence in the fact that you feel that it's going to go up. Do you think it will get back
exactly.
to like 60K this year? Do you
Oh,
do you think
easily.
that's, yeah, you reckon?
Um, this year, I'm not entirely sure. It's sort of we need that confidence of the breakthrough from the
Hmm.
42, 43K mark. If it breaks the 42 to 43K, I wouldn't be surprised if it takes a few months to return to 60K. But a lot of the bulls on the in like social media and so forth, they're still sticking to their forecasts of 100K Bitcoin by the end of the year, 160K Bitcoin by the end of the year. I don't personally think it'll reach 160K by the end of the year. If it does, I mean, I'm not going to complain. But ultimately, I wouldn't be surprised if we do return to the previous highs before the end of the year.
Here's a question for you, because I'm looking at sort of like all of the reports at the moment on the stock market, Michael Burry, hyperinflation, interest rates moving, and we've already seen the Fed say, "Oh, we're not going to be increasing interest rates until 2023." They bring it forward to 2022. If he is right, and this is one thing I said in the video, that if you're trying to put your money in a place where inflation isn't eaten away, stock market being overvalued and being a bubble is it's an issue, because potentially if you put your money in, if it's already in a bubble, is it likely to push furthermore to give you that protection against inflation? So the natural other place for people to look at would be cryptos, because they're not linked to any fiat currency in any way, shape, or form. If he is right, do you think that could be the catalyst for crypto, Bitcoin in particular, to actually just take off? Because if we start to see, and I was reading somewhere that the interest rates, because typically they will increase at small increments, so it's not too much of a shock to the system. I think so I read something, I think it was last week or so. They were predicting that there will be 2 interest rate rises. I think they were saying about 0.25% each time, which I think will be a big shock to the system in terms of lending. What do you think? I think I put
Um,
out there. Did you get me?
yeah, I did get you. I sort of got the gist of your question. So overall, I wouldn't be surprised if we do see more interest rate hikes. I think the US has sort of got to the point now where they're starting, and especially the Fed, they're starting to lose. It feels like they're losing control of inflation a little bit,
Mm-hmm.
where it's out of their target range, and it's like they're having to increase interest rates now to try and claw it back, and it feels
Mm-hmm.
like a bit of a move of desperation overall. Um, but with regards to crypto and stocks in general, yes, it can be argued that stocks may be in a little bit of a bubble right now. I mean, hey, I definitely think chances are good that it's in a bit of a bubble right now. But the risk of being out of stocks is, for me, far higher than the risk of being in stocks. I'd
Mm-hmm.
rather react to a bubble bursting than miss the gain of just thinking that we're in a bubble. And
Mm-hmm.
that's sort of the way I'm looking at the moment. Um, Crypto, it's sort of in that stage right now where no one's really sure if we're going to see lower lows than we have previously seen. I definitely think we have reached lows. Whether those lows are the bottom, I'm not sure yet. It can obviously drop further, but that's why I think right now the most important thing, yes, I would definitely have crypto as part of my portfolio, but I think honestly right now diversification is
Mm.
such a useful tool, especially with all the uncertainty floating around pretty much every sector right now. We've got uncertainty around what's going on in the US. We've got uncertainty around tech stocks. We've got uncertainty around crypto. Just feel like everyone's not really sure what's going to happen next. And that's why I would say, yes, maybe look to add some crypto to your portfolio, whether that's like 1% or like 5 to 10%. Look to have more of the index-based ETFs as sort of a safer bet, and just sort of branch out in many different areas to make sure you don't miss out, but also you're protected in case something does go wrong.
Mm-hmm. Yeah, I would completely agree with that. Diversification really is the key. It really, really is the key. And I would argue that, this sense of uncertainty is actually a common thing. We never know at any given time what's going to happen with the market. I think the difference from now to where we were this time last year was that everything was going up. So it's like there
Yeah.
was this buoyant confidence, and that then meant that huge volumes ended up going into the different asset classes, and that then basically gave further confidence for people to then just kind of invest. Whereas now we're kind of like, okay, we don't really know what's going on, but this is normal territory, really, which is why diversification is so important. And I think you hit the nail on the head there. You know, the danger of not being involved or being invested in stocks is it far outweighs the potential. Well, let me rephrase that properly. It's far more risky for you not to be involved than to be involved, because what if we're all wrong and the markets continue to surge 20, 30, 40% over the next 12 months? Now you've missed out because you've been waiting for the crash to happen.
Exactly. And if you zoom out on any major index, there's only one direction that it's gone. And that is essentially like a 45-degree angle straight up. So I definitely wouldn't bet against the markets. And instead I'd rather react if a crash does happen, in that sense. But what's your sense of what's happening in the global markets right now, especially with the interest rate hikes?
I think it's uncertainty more than anything else. We just don't know what's going to happen, and I think because we've seen the Fed change stance, it's kind of like, okay, cool. So obviously they were trying to play it down before. They realized that, hold up a second, this could be an issue, because, you know, when inflation numbers come out, you know, 4.2% one month, then it's 5% the following month, and people will say that, okay, well, the pipeline's clogged up because of everything that's happened with COVID in terms of the cost of producing things. So there's always going to be that natural jump in inflation as a result of that, because if it costs more money, that has to be passed on to consumers. That makes absolute sense. But I think the Fed downplaying it and then saying, hold up a second, maybe we need to revise. I'm interested to see what the numbers will come out over the next month or 2 months, whether they begin to stabilize or whether they start to fall off or whether they start to increase. Because if they start, my fear is if it starts to increase, then the Fed's going to have to make a further move and maybe bring those interest rates hike back even sooner, which means that Michael Burry in that situation would be right, because what he's arguing is hyperinflation that they can't control, which means they have to interject and intervene very, very quickly. And I think that's going to also obviously be a big thing for people to consider going into the markets. I mean, I'm looking at the moment about putting another 10K. I'm looking at maybe the S&P 500, because it's like, what's the S&P 500 at the end of the day? So it's going to be an interesting time, but uncertainty is the name of the game when you invest in these stocks. I think ultimately it still comes down to what you've already mentioned, diversification, and just understanding, right, this is the risk that I face here. Am I comfortable with that risk?
Exactly. And I completely agree with you. I myself have also just put in a decent chunk into my eToro portfolio as well, like another, like around 10K. So I definitely think it is a potential buying opportunity, especially for markets like crypto. But then obviously keeping a close eye on just general stocks and making sure that if something does go wrong, are the measures in place to catch it before the damage is too bad. Like obviously we can't stop all the damage, but at least limit the overall impact on the portfolio to a point where you're still outperforming the market in a sense.
Yeah, and the best way of doing that really is to make sure you've got money in different pots all over the place, so you get that saturation and that diversification. I mean, I've been tempted for the last few months to put even more money into Tesla, and I couldn't bring myself to do it, because I was like, maybe I'll reach my risk tolerance with Tesla at this point in time with what I already have, and it's like taking my own advice and just putting some more money into general markets so I feel a little bit more comfortable. For me, is kind of where we are at the minute. But yeah, it's been interesting seeing Tesla actually do well over the last, where is it right now? Over the last, actually, well, no. Is it still doing well? I've got Tesla in Hargreaves Lansdown. I've got Tesla in my eToro. I've only got a little bit, a tiny bit in eToro. But yeah, it's been one of those ones where it's like we've seen a bit of a. It's actually, yeah, I'm up 5.3%. at the moment on
Mm.
my Ethereum little holding. So where I've got most of it in Hargreaves Lansdown, that will be doing really, really well. But I remember looking at it at $899 and I was like, oh my God, maybe I should take
Yeah,
some profits. And I didn't. I was like, oh my God, but this is
and that's
this
after a
is the
stock
game that you
split
play.
too.
And that's after the stock split as well, you know? So it's
Yeah,
incredible. It's incredible.
I was looking at Tesla around when Elon initially made that tweet about taking it private at $420 a share, and that was before the stock split as well.
Mm-hmm.
And I think it was trading around $300 just before that tweet went out, and I was thinking this is so overvalued right now, especially compared to their fundamentals. And then all of a sudden, the price just started skyrocketing and skyrocketing and skyrocketing. And then only later on did they finally have their first positive year, which I think just added more fuel to the fire.
Mm-hmm.
So I've stayed away from Tesla for a very long time.
Do you have any Tesla at the minute?
I haven't owned any Tesla since about 2018.
Really?
Yeah. I know that's a huge thing. I missed out
was
on,
that purely? I think because I know that you're quite analytical when it comes to you're very methodical when you're looking at researching and buying the stocks. Was your main blocking point because it's overvalued? The numbers don't make sense.
The numbers didn't make sense at all. I think now they make a lot more sense than they did back then. Mainly because there was just no profit. The company was losing money every single year, and the complete overvaluation, what I'd call it, was purely based on Elon. And I think a lot of that is
I'd agree with that.
There's too much hedging on one person right now. If something had to happen and he stepped down or something happened and, like, heaven forbid, but dropped dead tomorrow, Tesla's price is essentially going to plummet probably 60 to 70%.
And that right there is one of my criteria for an exit. If anything happens to Elon, I'm out. I'm out because, like you're saying, the real fear is the share price plummets, and I'm not sure that I would be happy with the amount that it would plummet by, because a lot of the value of Tesla and the confidence in Tesla is because he is at the helm of that business.
Exactly, and that's something I generally try and avoid when investing, is a reliance on, say, a certain individual, because we're humans. Anything can happen to us at any time. And generally, say something happens to like the CEO of, trying to think of a company off the top of my head, like
Coca-Cola. It doesn't make any difference to Coca-Cola.
Coca-Cola, the brand's there, the foundation of the company's there. Like, yes, it might have a small impact on the price, but we may be looking at 5 to 10%. Like, something happens to Elon, Tesla's price will absolutely plummet. And I wouldn't see any other reason why it wouldn't plummet that much. So that's why I'm generally quite scared of Tesla, I would say, in that sense, is there's just too much hedge on one individual.
But you must have exposure to Tesla in like an index fund of some kind, right?
It would be so fractional that it doesn't actually matter.
Yeah.
So even if something happened, it wouldn't really even impact the overall value of that ETF.
Yeah, I mean, it's a difficult one, really, because I mean, I love Tesla, and this is where you're supposed to be dispassionate about investing, but because I drive a Tesla and I know the community really, really well, and I pay a lot of attention to what's going on, it's like I really just want to see the company succeed. I really want to see this company succeed and do really, really well, and lead the charge forward for this, which I believe that they will in the long run. But it's like, where you have heavy, the question is, if anything happens to Elon, who takes that spot? I don't think that there is actually anybody that could replace him. There isn't anyone who could replace him, because I don't think anybody has the that level of an eccentric personality to fill that void and be as creative and as ingenious as he has been. I just don't see it, and that is a big issue.
Exactly, he's kind of like the Iron Man of our generation, you know. That eccentric billionaire who just does and says whatever he wants, who has visions that everyone's like, who even thinks of that? Like, who wants to colonize Mars? It just seems so ridiculous. But I mean, when you're like this world's second richest man, then why not? You know,
Absolutely.
you can have those visions.
Cool. Have you got any new stocks that you're looking at or new cryptocurrencies that you're looking at within your portfolio in eToro? And by the way, guys, maybe I should have done this before when you came on, but Rallek, basically, he is one of the guys that you can copy on eToro. So if you go onto eToro, if you are using eToro, you can go and look for him, search Rallek, and you can see what he's invested in, his portfolio, his performance, and all that kind of stuff as well. So is there anything that new that you're researching? Are you doing any changes to your portfolio, or are you just keeping it relatively the same for the time being?
So at the moment, with me adding a significant amount of funds to my portfolio, I'm right now just trying to maintain the exposure values for my copiers.
Mm-hmm.
So I essentially added funds yesterday, and I'm looking to allow everyone 7 days to match my contribution. And then I'm just going to be investing at the same exposure levels with my current position, so that even if people can't add funds, they're not impacted negatively by any moves I do make. New moves that I have made, one is basic attention token. We spoke about it when I was last on. At that time, it wasn't yet on eToro, and they have since added it. So that is like one of my favorite projects, and I've just picked some up there.
Nice. Which one did you get?
Basic attention token. So BAT.
Okay. So talk me through that then, because I can't remember how you explained it the last time we were on that live session.
Yes. So basic attention token is essentially a crypto that gets rewarded to users based on the ads that they're exposed to. So if you watch ads, you can essentially earn an income. And I've spoken to many people, a part of different countries as well. And the amount you get paid also depends on the country you're in. And in the UK, it's a lot more than, say, in Bulgaria. So I know a few people who've made like £1,000 by using it over the past like 5 to 10 years. Obviously, a lot of that is due to the fluctuation in the price. So it wouldn't have been, say, a payment of £1,000, but that basic attention token would have increased in value to actually get to that point.
Yeah.
And it operates through the Brave browser, which it works off Chrome as a foundation point, but it has a built-in ad block. And then also rewards you for watching ads, as well as you can tip content creators. So you could subscribe with your YouTube channel through Brave, and then if people are watching you with Brave browser, then it'll automatically tip you in basic attention token. And that's the whole ecosystem of it, where it's sort of giving the power back to the consumer with regards to ads. So you can say choose to not view any ads if you don't want, and then obviously you won't get any BAT. But if you say choose the highest degree of ads, then all the ads that you do see, you get a reward for at the end of each month, and then you can contribute that to the content creators that you watch as well.
No, so just talk me through the practicalities of that then. So I've got this channel on YouTube. So
yes,
I could subscribe my channel. Then how would that work actually? How does that work from a YouTube point of view then? Because I'm thinking, because obviously my channel is monetized in terms of the ads anyway. So I get paid from YouTube for the ads, but I also get paid from BAT also for people watching the ads. Is that right?
Well, it won't be YouTube ads that they're watching then. Because a lot of people will watch YouTube with ad block on. You wouldn't get any ad revenue from that. So the nice thing about the Brave browser is, yes, they won't see any ads, but you will still receive a revenue stream, even though they're not watching a video ad on your channel. And all of that is done through Brave. So it wouldn't be part of YouTube, but it would be part of Brave in a sense.
Perfect. And I guess that's transferable across all platforms. If you're watching something on YouTube, for example, on Facebook, for example, that will still apply. If you're watching something, I don't know, somewhere else online, that will still apply, which for consumers is great, because a lot of the time you've got no choice as to what ads you're going to see. What you just, especially on Facebook, you got to deal with it basically. So why not get something back with that as well?
Exactly. Exactly, and
Interesting.
that's the whole foundation, and that's why I love the project so much, is because it's something different, it's something so interesting, and it's sort of like our attention is always treated as a commodity that we don't sort of have any power over, and now finally there's sort of a solution where we are gaining the power back for the commodity, which is our attention.
Yeah, and let's be honest. This has made Mark Zuckerberg a billionaire, leveraging our attention via obviously Facebook and Instagram and all the other properties that are owned under that banner as well. So I'm just looking at your portfolio right now. Actually, yeah. So yeah, you're actually up 2.1% on that at the moment. So good,
Yeah, it's been
interesting.
fluctuating quite a lot over the past few days. I think it was up like 11% the other day.
Really?
But it's just been, everything's been so up and down in crypto right now that there's not much you can do but just wait for Bitcoin to do something.
Yeah, absolutely. One thing I do like about your portfolio, I'm looking at it right here. It's actually it's very, very diverse. I know you've got a lot of crypto in there, but you've also got Google, Amazon, you've got Nvidia in there, you've got XRP, Dash, you got Coinbase in there. How you doing with Coinbase?
So I initially set a current entry price of around about $250. And then they ended up releasing their financials. It was relatively good. So I thought, okay, let me just enter. I think it was about 270. And unfortunately, it did continue to drop lower. So right now, I'm about 12% down on Coinbase. But for me, that is a very long term buy.
Hold.
I'm
Yeah,
not
yeah.
looking to just get rid of it as soon as possible. So in the long run, I think it could easily hit like 400-500, if not higher. So that's my current outlook on it. I think a lot of it sort of hedges on just sort of seeing what happens with institutional money as well in the space, because that's most likely going to be where the big moves come from in terms
Come
of their
from.
revenue too. Yeah.
Yeah, I'd agree with that. I mean, because Coinbase was an interesting one because I got in on IPO day and I came out just as the markets opened and things went absolutely crazy. I was in there for like maybe a minute, maybe two. That was it. I got out. And thankfully I did because it dropped. But I know people that went in and they're still holding it right now. They're looking at
Yeah.
thinking, and I think with all kind of IPOs and stuff like that, when there's so much hype, the danger is that it doesn't live up to the expectation. Certainly after the first day, and again, it kind of really reiterates the research. Why are you buying it? What role does it play within the portfolio? So on and so forth. Are you willing to hold this for the long term? How much of your portfolio are you allocating to this? Is it 50% because you think it's going to be the big boy and it's the main play, or is it kind of like a very small portion to give you exposure to a sector?
Exactly. And I've sort of got a general rule with IPOs, especially on eToro, and that is to just stay away.
Hmm.
I think it's so volatile when it comes to IPOs. Like, yes, it could IPO at a price that you might believe is lower than what it should be, but when it comes to IPOs, I find a lot of the time the investor sentiment is even more irrational than it normally is.
Absolutely. It's
So
like a
that's why,
new toy, new
exactly.
stock. Let's get in here. Let's have a little play around with it. Then you get the day traders that obviously then try to win off the momentum that then basically provides, and that adds more volume to it. But when they come out, or big institutional money comes out, who are there with a very specific strategy to get maybe a little bit of a scalp on it, that's when you really kind of get left holding the bag if you don't know what you're doing.
Exactly. And you're essentially, especially as say a long-term investor, now you're entering the game of all the day traders. And generally I don't like playing that game. It's like if they want to try play off margins, by all means go for it. But I'm more in it for the long run. It's not going to make any major difference if I enter a week later. If anything, that'll get rid of most of the hype, let things calm down. Yes, I might miss a little bit on the if the price does increase, but on the opposite side, I think I'm more likely to miss any downside of the initial hype around it, which is what I'm looking to do most of the time.
Yeah.
We see that all the time. So, but I mean, like another stock that we saw a similar thing with, which I've had my eye on for a while now. It's Corsair. So
Hmm.
like I'm a huge fan of Corsair. I use like pretty much all their products. Most of my peripherals are Corsair products, and in general, I think they have a lot of potential in the long run. But even now, it's sort of one of those stocks. I'm just still sitting on the sideline. I need one more reason, one more good reason to buy, and
Yeah.
then I'll buy.
Yeah.
But right now, I'm still 50-50. I'm just not entirely sure which direction it's going. So that's generally the approach I take with regards to IPOs, where I'll wait, I'll see how it goes. And then I need that sort of confirmation that, yes, this is something that's here to stay and it's undervalued right now. And there's a big opportunity to take advantage of that.
What are your typical buying signals then that you look for? If you had to, like, your criteria, if you had to, pick, the top 5, what are your main criteria for stocks? Obviously, value and all that kind of stuff will be in there, but I'm interested to know for the viewers.
So the main things I look at is, well, first of all, the management team. I want to know that the leadership has direction, that they're not just essentially full of nonsense.
And not just like an Elon Musk personality that's irreplaceable.
Exactly. So I want to see their vision, what they're actually, where they want to take the company in the future. Then it's about fundamentals. Is it profitable? Are you making an income? Like, it doesn't help. You could have the best product in the world, but if you're losing money every single quarter, like, I'm not interested in the company. Like, yes, I can love your products, but as from an investing standpoint, I'm not going to invest in a company that's sort of hemorrhaging money every single quarter. As well as the sort of the core structure of the company itself, in terms of like ratios and other signals in general. More just for the general health of the company. So I want to make sure that there's not too much debt. I want to also make sure that there's not too much cash just lying around, not doing anything. And if there is, say, too much cash, has this been addressed in previous releases, and so forth? So I would definitely say part of that, transparency from the leadership team about sort of everything that's happening in terms of the skeleton of the company, and anything that could be sort of a red flag. Are they addressing it? And is there a justified reason for that? And then finally, obviously, what is my estimated value of this company? So taking all this into consideration, what is my forecasted value for that company? What is the price now? And in terms of my time horizon, will I make the required return that I generally look for? So a lot of what I'll do is I generally look for quite a high return on investment, in terms of opportunity. I'm not the type of investor who looks for, say, 5% in a year. Like, I'm not interested in that. And I also think, like, copiers on eToro in general are not interested in 5%. We sort of live in a day and age where it's people might get used to, say, like 100, 200%. That's not realistic. But I would say look for between 20 to 40% on a particular investment in a given year. And then if there's room for that growth, if I think it's justified, then I'll enter. But I definitely think it needs to sort of meet all of those criteria, as well as be a good fit for my portfolio in terms of what I already have. So if I'll use NVIDIA as an example. I've got both NVIDIA and AMD. But if I'm just invested in like NVIDIA, AMD, Intel, Microsoft, and all these companies, obviously I've got too much exposure to one particular industry, and I'm not happy about that then. So all of this sort of comes into play, and you want to make sure you got a well-balanced portfolio, and that whatever you're adding to it doesn't disrupt the flow of your overall strategy too.
That's interesting. And you actually made a point on here around the cash available to them, because I think I'm not necessarily a big believer in the fact that having too much cash is necessarily a bad thing. I think that, yes, you have to know, right, why are you holding the cash? Because why? Like, is it going to be deployed for a particular project? How is it going to be reinvested into the business? Is it going to be used for share buybacks? Is it going to be used for a new project? Is it going to be used for a new product development? What is it going to be there for? I think sometimes when you're doing research, and I know we're talking a lot about research here, which may be a little bit alien to people who are actually watching this, who don't know how to do research. But I think it's really, really important to understand those facets of a business in terms of how it actually operates. Debt isn't necessarily a good thing. But I do want to ask you this. Obviously, you're looking for companies who are making, profit right now. Some people will argue, well, particularly if they're starting, looking to buy some meme, like, I would say meme stocks, or let's just say penny stocks, new companies that are just kind of, newly beginning. they're not necessarily going to be having any money right now. So not making any
Yeah.
money particularly. So how much of a forward forecast do you look at in terms of buying those kind of companies, or do you generally just stay away from those for the time being for the purposes of your portfolio for copiers?
So in general, with regards to penny stocks and sort of the newer companies, this can be a very viable investment strategy. And
It's
if
a
you look at
risky
some of
one, though.
those,
It's a
it's a
very
very
risky one,
risky
though.
one.
Yeah.
And that's the thing, is you need to know what you're doing. I don't think it's for, say, the new investors to sort of jump into those companies that sort of aren't making a profit, or have, like, say, a 1 or 2 cent change in the price is like a 20% change in the overall valuation. That's very, very scary in general. And when it comes to that, like, obviously you've got your venture capital funds, which that is their entire strategy is they'll say invest in, say, 40 to 60 different startup companies, and only like 3 to 4 will actually end up making it. But their overall return will still, say, exceed like 40 to 60%, because those 2 to 4 that actually make it end up bringing them in such a high percentage that it sort of makes up for all the other companies that did fail. But when it comes to that, yes, it's got the highest upside, I think, out of pretty much any strategy when it comes to stocks, like basic strategy when it comes to stocks. It is also the by far the most risky. And I would definitely say you need to know what you're doing.
Absolutely.
You need to know that company in
Yes.
and out. It's not like you can just do some surface level research. You need to really, really do research on that company and understand everything and how they operate before I would even consider going near a company like that.
Yeah, and I think you make a really good point. Like the professional companies that do this, the venture capitalists, the business, those kind of companies, they are diversifying across a large number of companies. And what I find most retail investors doing is they'll have like 2 or 3, and it's like you've got a 1 in 3 chance. Like the big money, the smart money is, you've got a 1 in 60 chance. The odds are one of them's going to do okay. And if it does okay, because of the way they negotiate the deal, if it does really, really well, that covers the risk for the rest of the portfolio. And I agree with you. You absolutely need to know what you're doing, what you're buying, how to research it properly, understand the business through and through, their competition, the sector, what they're doing, the product they're developing, how they're going to go to market. Companies like that, I would argue that the management team is so important, really, really important. You have to kind of know what to look for.
Exactly. But just in general, like, of companies that say maybe undervalued, who have maybe aren't the penny stocks, but have that massive upside potential, which I would say wouldn't say necessarily require that in-depth level of research as the like penny stocks. Pharmaceuticals can also be quite a good industry to look into if people are interested in that sector. Once again, it's also a very risky industry in general, but if, say, a company does have a successful drug trial, then you often see massive returns on investment there. So yeah, just another option. It doesn't always have to be this sort of like that Wolf of Wall Street where sort of these penny stocks are wrapped up to look like these amazing things. There are other industries which can sort of do similar things, which might not look as
sexy.
I didn't want to use the word sexy, but yes.
Yeah, absolutely. I agree. This has been a really good conversation, actually. We're 54 minutes in, actually, and this was there was a surprise. It's good to actually have you jump on and stuff, just to talk about this kind of stuff. And I hope everybody watching this has made benefit from it. We need to do this again at some point, and actually organize a proper live. So maybe we could talk offline about that, maybe in a couple of weeks' time,
Yeah, sure.
and we can I don't know,
Definitely.
maybe pick something to talk about specifically. But yeah, this was really, really cool. And I know that the Euros are on right now, so a lot of people are watching the football.
Exactly.
And we've got a big game
game's on tomorrow. So
the big game is on tomorrow. I was looking at the countries that are left in the Euros, and things do look good for England, but I know Italy might be a bit of a challenge if they actually go through. Italy and Belgium, I think, will be the 2 biggest threats. But the Italian team are playing really, really well. Belgium looks they've had a bit of a rocky time in some games. So I don't know. We'll see what happens. But people are getting very excited. People are getting very, very excited. I'm don't count your chickens yet, because you just don't know what's going to happen. But
Yeah, England can always do England things.
exactly that, mate. Exactly that. But we'll see. All right. Cheers, man. I appreciate you for coming on for this. Yeah, let's
Yeah,
talk offline. We can organize something again for a live.
perfect. Thanks very much for having me on. And yeah, I'll definitely
Cheers.
stick around for the rest of the stream if you do continue further.
Yeah, cool, man. Thank you, bro. Cheers, man.
Thanks. Ciao.
All right, guys. So if you are using eToro and you are copy trading, definitely go to search Rallek on there. You can see his portfolio, what he's actually invested in and stuff like that as well. And if you do want to copy him, you can by all means copy him as well. I'm about done, really. I want to do something different this Friday afternoon. Like I said, I was going to post something that we've been working on for a very long time. But it's not quite there yet, and I don't want to put up anything that is subpar. It is very different. I'm going to warn you right now. It is very, very different, but it's interesting, and I want to bring this kind of content on, not just to obviously talk about the investing side of things, but highlight another person's journey, another person's story, and hopefully through the story you're going to have points of interest. Some inspiring bits as well that are relevant and transcend across his experience and their experience over to maybe what you're facing on a day-to-day basis. So it's very, very different, but it is. I was watching back the footage, the first edit of the footage this morning, and I was like, I was so reticent. I was thinking, is this going to go down well? Is it not going to go down well? But the reality is, you just don't know until you actually try it. So it is very, very different. I'm going to warn you right now. It is very, very different, but it is an interesting piece. And we're running a bit of a trial for what might be a new kind of content stream coming to the channel that will be different to what we've already seen. Of course, we're still going to be talking about stocks, investing, all this kind of stuff, but just broadening the conversation about money a little bit wider to encapsulate different careers, different experiences, journeys, and people, different levels of people's financial education through life. But there we go, guys. I appreciate you. Thank you so much for dialing into this. Have an amazing week. Hopefully, weekend. Hopefully, we actually do well in the Euros tomorrow. So we'll have a great weekend as well. But guys, appreciate you. Have a good evening.